Earnings season has begun, and for the last 2 years, we've experienced fantastic earnings. Companies consistently beating, raising guidance. However, thus far, I don't think we're seeing the same kind of picture, and I don't even think the most important companies have reported yet, but they've dropped preliminary hints. They could have waited a few weeks, done what they were going to do as a means of saying, hey, we're going to have better profits in the future, better earnings in the future, but did them in advance. And I think the difference is that doing it in advance is more of a softening the blow for any possible future negative news that can come out. So we talked about Netflix yesterday. I saw a highlight from that earnings call that I thought was quite negative, and we kind of mentioned it, but coming from the CEO's mouth is quite important. And that's the notion that losing subscribers should not be celebrated as a success. The stock was still up 7% after hours. However, within an hour of trading today, poked into the negative. Yes, it did come back, but the market across all three indices is approaching some round numbers. And it's a real big question. Are we going to get through those round numbers and continue to push up or not? I'm not so convinced. I think this is going to act as some pretty good resistance going into earnings season, where people are going to get a little bit of a reality check, because I think the earnings negative picture might just be beginning. The numbers are 4,000 for the S&P 500, we're at 3,900 and change. 12,000 for the NASDAQ, we're at 11,900 and change, or thereabouts. And 32,000 for the Dow. We just got Tesla, which on the surface of things looks like a revenue beat. I expect the business to do well. I expect them to be around. I expect them to continue to grow. However, the revenue came in, or positive free cash flow, I guess we'll call it, positive free cash flow came in at $600 million, and cash bonus from Bitcoin sales came in at $900 million and change. You know what that means? Outside of a realized Bitcoin loss, which added cash to the balance sheet, but nonetheless, they sold at a loss, Tesla reported negative free cash flow. This is a company that has incredible demand. They have more demand than they can supply. And they said that, and they're going to continue to produce as such. But they still had negative free cash flow. After consecutive quarters, many quarters, where they've had positive earnings. This time, they had to basically paint the books with some Bitcoin sales. Quite interesting. So, I wasn't viewing Tesla as a company I was worried about. I wasn't. I'm worried about Apple, who yesterday, or rather Monday, let some news out about hiring. Google today did the same thing, but just a week ago, they said they were going to slow hiring. Now they went to, we're going to pause hiring. Interesting. So, I'm seeing some things that are concerning. I don't see a massive reversal in that. I think it's getting worse. As we've said many times in the past 2 weeks, with rates below 3%, rates shouldn't be below 3%. Now guess what? The 10 years back above 3%. I think you can continue to push, and get back up to challenge those highs of the 10-year, because the Fed is going to 3%. In about a week's time, the Fed funds rate is going to be 2.5%. I mean, there's a Fed meeting in a week, and then we get Apple earnings. And I've laid out the case multiple times why I think Apple earnings aren't going to be so great. I'll just lay it out one more time in case this is the first video you've seen in a bit. Pre-owned Apple product sales, or prices rather, are down. Apple products typically do well on the pre-owned market. Some people initially, I heard about a week or two ago on CNBC, were saying, oh, that could bode well as a positive sign for Apple. People are buying new products. Okay, maybe that's true. But consumer surveys are saying that consumers are pulling back from consumer electronics. Guess what Apple makes? Consumer electronics. Guess what was happening before COVID? iPhone upgrade cycles were lengthening. We saw this COVID bump. We repriced the stock based on COVID sales. It ended up trading well above its historic PE multiple. And now we might have a PE contraction. I view that as not such a good situation. And I think it might break this uptrend that's been kind of going on since late-ish 2020, if I remember correctly, and might return closer to the long-term uptrend. Because I'm not saying this is a bad business. I'm not going to say it's going to go away. I'm not saying any of that. I'm just saying it's expensive. And it's not Netflix that's down 60% despite today's rally. It's not. It just simply isn't. It's up 16% in the last month. So I think a pullback is warranted, and for a stock that's 7% of the S&P 500, it's gonna cause some things to happen. This is not, I haven't even mentioned the Forex hit. Apple does tremendous business overseas, and maybe they're experiencing some margin compression. They're definitely experiencing some pricing problems. I know they had to increase prices in Japan. I don't think they've done that anywhere else, but the dollar's up quite tremendously. So let's see what happens. I was up yesterday when the market was up. I'm up today when the market's up. And I was up Monday when the market was down. I'm hedged up. I'm protected. We'll see what happens. But I am cautious shorter term. I think it's going to be pretty challenging to really hold meaningfully through those nice, very nice round numbers that we've been below for some time. But are just such nice round numbers. 4,000, 12,000, 3,200. Those are some nice round numbers. I think Fed meeting, hawkish, 2%, 9% inflation. That's quite a difference. Oil prices are $12 off last week's high. This rally has been quite strong. And I think around these nice round numbers, it's time to put on some protection. You can still hold the stocks down 80, 90% if they're well selected, truly growth stocks that have the potential to 10x. The risk reward is fair. They're down for over a year, well longer than the market. They might be tremendous opportunities. I'm still holding those stocks. I've 50% gains in the last few weeks because I was expecting a rally. But I've trimmed some of those gains, but I'm still holding some of those positions. And with some of those gains, I'm adding some protection. So that's how I'm positioned. That's what I'm doing right now. And that's today's video. So until next time, peace out.